Last week, markets survived the loss of aura at the Fed and it survived the signing of the Iran peace deal to make a deal. But here comes the real test, Micron earnings on Wednesday. And this one matters more than you think because over the last few sessions, while parts of the market have been deteriorating, cough cough, Mag 7 names, one group has done all the heavy lifting, as I'm sure you know, semiconductors, but more specifically, memory stocks. They've covered up the weakness and kept the index higher. The million-dollar question to ponder this weekend is if Micron delivers on earnings, does the AI trade rally again? Or if they disappoint, does the whole thing come crashing down, the index included? So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 5 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame talking about candle structure and location as we always do. In terms of structure last week, we're left with the red-bodied doji. That would technically imply that in the upper wick, sellers absolutely pushed back. In the lower wick, buyers absolutely pushed back. However, we do have undeniably a red-bodied close, which means that the candle closes underneath the opening print, and therefore, technically speaking, sellers made more progress. If we're thinking about location, though, on the bar-to-bar count, how much progress was it really if we've got a substantial higher low, a higher high, and a candle close right at the previous week's range high? Technically speaking, we have a higher close versus the previous week's close. I would be pretty neutral here on the bar-to-bar count, especially remembering the higher time frame context, right? This is the highest high in the trend count. It's the all-time high as well. This pullback was a failure underneath the 2-week equal lows there at 732 for the sellers, meaning that this is a higher low in the trend count. And honestly, this just looks like consolidation in a bull flag range that's being developed. If we break out the Fibonacci's, of course, without making a new higher high, it's going to be pretty darn difficult for this Fib 38.2 level to move, but all of it's still happening above, of course. If we break out the anchored VWAPs on the weekly, you can see we're still above the entirety of the stack. No concerns there. If we break out the volume profile on the weekly chart and just zoom out for a second, we know that we looked underneath in that lower wick from now 2 weeks ago, the high volume node, and we got no rotation into the low volume void. So once again, how bearish is the weekly bar? Yeah, sellers made slight progress, but how much progress really? I wouldn't say all that much. Let's take a look at the daily timescale and firstly evaluate this week's expected move. The expected move is in this gray shaded area right here. If you're not familiar with this study, check out the video tutorial in the top right hand corner. If we're contained by the upper bound, it's 758.94, and that of course implies a higher high versus the high from last week. That's actually bullish and will get us back into a daily uptrend. If we look at the low, not so bullish over here. The number is 734.54. Yes, versus the major low, it's a higher low, but honestly, I would not want to see the low of the Wednesday session taken out from FOMC, and technically this is a lower low from there, underneath that 738.15. So expected move strikes me as being fairly neutral. We'll see how the market starts to develop early on in the upcoming week, but as we know, when it relates to the trend count, we've got to be pretty, transparent and clear and objective, honestly, about what's happening. This is a potential lower high still. We talked about this in quite a bit of detail in Wednesday's analysis, and this to this is a potential higher low. I wouldn't call either of these things concrete until we actually take one out. In the case of consolidating here and breaking out to a new high, great. This is no longer a potential lower high. We have equal highs across the board, and this will firm up as a not potential, but firm higher low. That's the optimistic take. If the market really starts to spend more time underneath the low of the Thursday session, it's a shortened holiday week, I'm recording this on the Friday. If we take out 744 and do this and move to the lower bound of the weekly expected move, I mean, yeah, could you still argue that this is a higher low from here to here? Sure, but we're technically coming from a lower high. I don't think you could call that a daily uptrend. I would have to say at best, you're in a neutral trend. If not, the loss of this low probably kicks us into a short-term daily downtrend, which is not really what you want to see. It's fine for weekly bull flag consolidation up here, but if you're really rooting for the market to get back into the bull gear, bull mode, if you will, like bulls on parade, nonstop, upward, unrelenting, trend, you've got to do something that looks like this. So bottom line on the daily timescale is that our trend is starting to get a little bit weaker here. It's bordering on neutral. The buyers need to hold 744. And in a picture perfect world, you're breaking the inside day high from Thursday, taking this out, consolidating here, and getting up and over this major origin of the breakdown. This was the first character change day of the market. This was Friday of now, 3 weeks ago, when we had that labor report come out stronger than expected, and we saw that unrelenting sort of sell that was underneath this 751.75. A reclaim of that level would be bullish for the daily chart, for the daily trend. It would also get us cleanly back over without sort of saying, is it not? It'd get us cleanly back above the daily 20 SMA, which is the orange moving average on the screen here. Let's go ahead and take a look at the hourly chart in terms of the trend over here, because if you recall, on Wednesday, we were pretty granular about the interpretation, right? On the hourly chart, this is an equal low. This was the high. This was the higher high, turning the uptrend on in the hourly chart. This is an even higher high. And we had sort of talked about, yes, this is very aggressive here, of course, with the FOMC, but it's potentially a higher low on the hourly chart alongside the daily chart. So for now, this is the hourly higher low, and what I would be looking for is a short-term higher low. We'd call this a soft higher low on the hourly to stay over 744, aka Thursday's low, just like we talked about. And then on the hourly chart, where do we start breaking back into a, at least attempt back up towards the highs? It's just naturally over Thursday's high. So I think the inside day makes our job fairly easy into the early stages of next week. Do we open in range, Brigade bolt up and out, bullish? We'd ideally like to stay above. And then your daily chart builds a little bit more confidence over 751.75, as we just mentioned, right? If the market's going to get a little bit more bearish, we take out the Thursday low, lower high 744. Okay, hang on a second. Now this is looking a little bit troublesome. Do we not have a potential hourly lower high, equal low on the hourly, and then where do things break down? As we just mentioned on the daily, underneath that 738.15, I wouldn't really be too fond of calling this a daily uptrend. I would say daily neutral at best, and probably more like starting to drift into a downtrend with the lower high happening here. In terms of alternate pathing, right? If the market looks below and fails 744, I would take that as a bullish signal. Acceptance back inside of Thursday's range would be bullish, back up to Thursday's high, and of course, then seeking continuation towards that major daily spot right around in here. Why is this such a major daily spot? Once again, if you missed it on the daily chart, not only the origin of the change in character for the market, it's also the opening print of the gap up open from Monday of last week. So that is your 751.75. Let's go ahead and throw on a couple of Fibonacci's here just to sort of build confluence, if there is any, against any of these key levels. We did this on Wednesday, so again, your high and low haven't changed. Of course, just reinforcing the 38.2 right here at 744 is your key hold. If you can stay above that, great. The odds would dramatically increase that we would look through this as a bull flag consolidation on the hourly and ultimately seek higher over the long run. If we lose that, it wouldn't be unreasonable that you just get into no man's land. I would focus on the structure, the double bottom neckline from over here, 738.15, and the 61.8 is slightly below that. Not the end of the world, but really just building some confluence at that 744. Let's go ahead and throw on the intraday anchored VWAPs and see what we have from this perspective. You'll notice on that Thursday session, we came into, this is the original Thursday of last week, not just, I'm recording this on Friday. So not yesterday, but the Thursday before that. This is when originally it was like, okay, we're going to sign this MOU thing. Everything's all set. We're coming out of this low, right? And so that anchored VWAP is acting as sort of support into Thursday's close of this week. There we go. Get my days right on a shortened holiday week. You could certainly see how Thursday's inside bar range is just the range. You will retake this anchored VWAP if you take out Thursday's high. You will lose the anchored VWAP from the news candle low if you drop Thursday's low. Right? So very just straightforward with use the inside day as your gauge, 744, 748.50. I have to say, if I just go back to the daily chart structure for a second, the hammer makes me think a little bit more bullish, right? The lower wick would indicate that buyers certainly started to step up there into the end of the day and were responding favorably to this prior set of highs, which is now acting as support. So base case, I would think consolidation, Brigade bolt here. That's the first step. This and a big reclaim of 751 is 751.75 to be precise, is very bullish for the coming weeks worth of trade, probably putting the pressure back on in the upward direction. Of course, as mentioned in the intro, Micron earnings will have a lot to do with how this market acts in the back half of the week. But for now, early stages ahead of Wednesday, I think the base case, once again, with the hammer, with the trend reversal happening here, right? This is your higher low. This is a short-term soft higher low. As long as we can maintain this, I would be a little bit more optimistic. Optimists generally win in the market. Something along this line is the primary path, right? Bears, you've got something to say. I know we've covered it already, but I'll do it one more time. This is bearish. Maybe you're hanging on by a thread if you do something that looks like this, but forget about it. You reject and come back through, probably talking about a reversal of daily trend. No good. Lower highs underneath 744, and certainly a definitive break underneath 738.15. The neckline, as we've now said many, many times, is just bearish, right? There's no sort of getting around that. So That's the analysis of the spiders. Let's go ahead and take a look at the market internals here. If you're not familiar with market internals, check out the video tutorial in the top right-hand corner. What do we see? I mean, for what it's worth, the inside day on Thursday was really met with very neutral market internals. Notice that there's not a big bull or bear build here. I mean, this is a notable shift in tone from earlier on in the week, but the volume flow is fairly neutral. Your AD line is fairly tame. We'll give it a little bit of a bullish benefit of the doubt, which I think just aligns with the base case we mentioned anyhow. If we go ahead and take a look at the futures session from today, shortened futures session, nothing happened. A little bit of liquidation here into the close of that shortened futures session, but nothing meaningful enough to really make me say like, oh, wow, I can't believe we're going to be gapping down 100 points. Maybe something happens over the weekend with this MOU and the push-pull between all parties involved over in the Middle East. Obviously, there's some things that are still not going so well. So we'll see. But in terms of what's in front of us right here, right now, the trend count is up, and we're looking for that hourly trend to continue higher. Looking at the market profile, if you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. What do we see? I mean, let's just acknowledge that value, right? Here it is, lower, drifting lower through the week. This is the FOMC day. It's still lower. It's higher in the individual session, but it's lower versus Monday, Tuesday. And then on Thursday, there's your inside day, inside value. So very, very neutral. Once again, let's just be patient for the break of Thursday's inside high or low. It's really that, I hate to use the term simple. Simple should not be confused as easy. Trading markets is not easy, but sometimes it can be simple in terms of looking at very black and white. Either you're above this level or you're below this level, right? You're either above the range from Thursday or you're below the range from Thursday. So nothing really to interpret from the market profile other than maybe just adding in a layer of confluence with the value area low from Wednesday on the FOMC session. If you break that, then you're just going to have more disappointment from buyers. Anyone who's long from the value area is going to start to feel like this. If you're above it, right, all the buyers feel like this. So really just sort of building a little bit of an additional layer off of that value area low from Wednesday. Let's jump back on over to the platform here. Let's take a look. And by the way, if I wasn't clear about the interpretation of the internals, it was like neutral to bullish on the Thursday session, right? Let's go back on over to the platform and take a look though at our good friend, the nasty NASDAQ, starting on the Qs. Weekly time scale. As always, thanks for bearing with me as I just reset the weekly time frame. There we go. What do we have? Similar but more bullish, right? And this makes sense. What's the narrative of the way markets have been trading right now? I brought it up in the intro for a reason. Your more well-rounded S&P 500 is lagging because it's got things like real estate. It's got things like healthcare as a more heavily weighted representation. It's got staples in there, right? It's got financials in there. Look at your pure play NASDAQ 100 tech, green-bodied hammer. So once again, instead of being an indecisive red-bodied doji, buyers clearly respond to the selling pressure from earlier on in the week. You could see here that we not only moved back up to the opening print, but we moved through the opening print, right? And then, of course, we closed strong at the highs of the weekly range. This is a green-bodied candle. It's a little bit stronger there on the interpretation than the S&P. Clearly a higher low as well as a higher high, and a candle closed completely outside of and above the previous week's range. All we really did here was go for a gap fill reversal, which is bullish, repairing the weekly gap. If we think about the dominant trend, it's the same as the S&P. This is the highest high in the trend count. This is a higher low. We still have that same exact interpretation of the lower wick here, offering a look below and fail. So sellers did not do their job. Buyers responded, and I would say they responded again via the gap fill reversal over prior week's high. And really, this is just like bull flag consolidation on a weekly timescale, right? There's your flag pull. This is all happening just like in the S&P 500 over the fib 38.2. We're much closer to the all-time high, but there's your fib 38.2. If we go ahead and grab ourselves the anchored VWAPs on the weekly, all of it's happening over the entirety of the stack. And just to be congruent, we will check in on that volume profile. And as you can see over here, there's your low volume void underneath. Sellers failed to rotate into it with that little lower wick underneath. You can even see here, look at the gap fill reversal. That's kind of the high volume node of this little flag range that's been forming. So the fact that we've closed basically in low volume no man's land, all the market has to do is continue to produce higher lows above that little shelf in here. And we'll talk about the gap fill reversal on daily in a second. That's bullish on the weekly chart looking for a breakout, right? If this is a failed breakout and we come in, we'll just have room for a higher low there. So let's continue on down to the daily chart of the QQQ. Let's firstly evaluate this week's expected move. This is a full trading week ahead, by the way. So gray shaded area, you already saw the video tutorial on the top right. New all-time highs, right? 762.87. My apologies. Brand new all-time high at the upper bound of the weekly expected move, likely pricing in a larger move over here in the NASDAQ because of Micron earnings. If you take a look at the lower bound of the expected move, technically, like in the S&P 500, don't love that. It's underneath the low of the Wednesday FOMC session, but it is technically a higher low versus the major 5% pullback low over here. I think it's actually a little deeper than 5%, closer to 8 in the NASDAQ. Nonetheless, that number is 718.37. It's in the, let's just say it's within striking distance, let me say, be a little bit more reserved. Spitting distance, kind of gross. It's in the right neighborhood of a potential higher low to continue to be established. And once again, that's the gap fill reversal we were just talking about on the weekly. So am I really all that bearish about the lower bound being a slight overshoot of last Wednesday's low? Probably not. In terms of the daily trend, I would say a lot of similarities here to the S&P 500. This is technically speaking a lower high. This is technically speaking a higher low. It's a much more clean higher low over the left side peak on the NASDAQ here. So I'm a bit more optimistic, and again, rightfully so, with the NASDAQ being so tech concentrated. So the current look on the daily is any consolidation here that can Brigade bolt up and out into blue sky territories, bullish, right? Naturally, you're going to be getting higher lows. If the market pulls back, want to see this offer support again, and that's at 722s. If we clearly take out 722, you've got yourself lower high. Yeah, we could start talking about maybe a little bit of lower high double top action. Remember, it's not really a double top until it is, and the trend confidently changes underneath the neckline, in that case, bringing in a lower low. So don't get too ahead of yourself with the possibility of a double top, although maybe that's going to be an interesting little clickbaity title, huh? Should we go with Micron title? Probably going to stick with Micron title, but double top. Oh my goodness, market crash. Anyway, don't get too hung up on the double top until prices at bare minimum, no pun intended, underneath 722 on the daily. Let's drop it on down to the hourly chart here. You could certainly see that on that FOMC session, much more of a respectful pullback into this level versus overshooting and getting closer to that neckline of the hourly double bottom. In terms of the hourly trend, low, higher low, double bottom neckline break, higher high, highest high, pullback, more respectful. This is a higher low on the hourly. You could now afford, again, on the hourly, you probably don't want to see anything deeper than this. The little opening range from Wednesday, that's 729.50. So getting into some pathing perhaps for the upcoming week. If we open in range, pull back here, that's okay. I would want to see this offer a higher low over the daily 20. That's an hourly higher low, right? Then this just kind of looks like consolidation on the daily in that weekly flag. If the market gets deeper than that, okay, let's say we go through, not the end of the world, but don't love it. Have to sustain an hourly equal low, consolidate here. Maybe you get another semblance of like this turns into a double bottom. Maybe it's two tests, a neckline break, and then you're back off to the races. Obviously, worst case scenario is you're underneath let me actually redo that with a little bit more respect for the neckline. Underneath 722, I would expect the neckline of this double bottom origin here, 709.25. Any bounce that continues lower highs underneath, you're probably talking about a more confident trend reversal. So the bottom line is that you need to watch 722. Picture perfect is this, right? Show me this on the hourly, and I'll probably be about as bullish as it gets, looking for the all-time high. If you show me this and continuation, I mean, that really just speaks for itself. How can you argue with that one? If you start to get a little bit more hairy down here, I'm going to give the market the benefit of the doubt first. Maybe we call this some kind of a double bottom. It does that, and we're back off to the races. Great. Reclaim the 729.50. Problems emerge when it's this. Problems emerge when it's this. And then this fails for a more major lower high in here. If that's another daily lower high, great. Or I shouldn't say great. It's good for the sellers, not great for the bulls. We're probably talking about continuation in the downward direction, then really weekly chop at that point. So that's the sort of pathing situation. Let's jump in here with confluence, if there is any, with our fibs, as we talked about on Wednesday. Yes, of course there is. There's your 722, 38.2. Here is your 61.8, 709.25, right from the neckline, right? Let's jump in here with the anchored VWAPs on the hourly, this one. You could see, once again, there it is. If you can hold your news candle anchored VWAP on the pullback, that's an hourly higher low. I'm bullish here. We could even start thinking of this through the lens of like mosquito pattern, right? Inverted head and shoulders. Something that looks like that. Right wing gets a little bit interesting depending on how it ultimately plays out, but you could see the higher low, right? So I think this makes sense. You could see how these will be early week confluence at the 722, even midweek confluence with the 722, all levels being reinforced here by our additional data points. Let's jump on into our NASDAQ side of the market internals. You can see that we have much stronger volume inflows on that Friday session. And also some of the reasoning there is you have some additions to the index level, right? There were some ads. It was 5 of them. I'm going to forget some, but here we go. CoreWeave, ALAB, Teradyne, two others. They will come to me at some point, I'm sure, and we'll go from there. Anyhow, this looks fine on the advanced decline line for the index level, and this looks fine also. Notice that on Wednesday, it really didn't even close all that bad, even though the market had that freak out. So I don't see anything at the exchange level that makes me scratch my head and think, oh my goodness, we just can't possibly be long this market anymore. It's so divergent at the exchange level. This is no good. Sell it all. Not really seeing that, right? And that's specific to the NASDAQ. Once again, you are getting a little bit more broad-based fall apart, if you will, in the S&P, but the NASDAQ seems to be hanging in there just fine. Let's jump on into the NASDAQ side of the market profile, and let's take a look at what we have going on over here. Let's just get this week's worth of trade on the screen. Once again, value moves lower earlier on in the week, but notice what happened on Friday. Right? Value actually shifts higher on that Friday session. It was clearly not an inside bar. You did move slightly higher. Sorry, Friday. So what happens in a shortened holiday week? Thursday, value moves higher, and that is a bullish indication. It's telling us that we have price acceptance at higher levels instead of like, hey, this is fair value, and let's honestly go back down and test some of these FOMC lows. Absolutely not. We have great excess at the low there. This is not the poor low. Even this A period is a decent excess low. M period spike here on Friday. This looks pretty good to me in terms of trying to turn off of, if we just go back to the chart here, trying to turn off of a higher low on the daily time scale, right? Let's finish up the broad market interpretation here with the IWM. Let's go out to that weekly time scale. And again, thanks as always for bearing with me as we just reset our weekly look. There we go. Should probably just save a chart style as that, but here we are. IWM weekly, same structure, but red bar on the IWM versus the NASDAQ. The S&P seems to be the weakest of the bunch, honestly. You can see here, red-bodied hammer, still substantial response from the buyers in the lower wick there. Not able to close back up through the opening print. The close is technically underneath as a red-bodied bar, but still bullish. More bullish, with that minimized upper wick versus what we saw in the S&P. Bar-to-bar count offers a higher low as well as a higher high. Candle close at the previous week's range high. Brand new all-time high here in the Russell as well. If you look at the lower wick, notice where it's happening over the previous left side peak. And to me, this is just a continued uptrend with substantial higher lows, highs, higher highs, and we just set a brand new all-time high, higher high on the trend count. If we break out the Fibonacci's, this of course is happening with the brand new all-time high naturally, all the way over the Fib 38.2, just meaning that, yeah, this is kind of becoming maybe a little bit of a megaphone pattern here, broadening wedge. But even if we pull back, it would be hard-pressed to be a mega bear here on IWM until something dramatically happens. I would likely just say underneath the 50% Fib, previous left side high here, which offered a pretty substantial low support there around that 270 area on IWM. Let's clear that one up. Let's take a peek at our IWM anchored view apps. There we go. This still above the entirety of the stack. Last week's pullback still over this anchored view app from the major low. Really don't see anything here that makes me think, oh boy, here we go. It's going to get nasty. Not really seeing that. I'm a non-believer also for what it's worth, thinking of this as a hanging man candle. If that was a hanging man, why didn't we go lower, right? You can go back and you could find these things all over the place. Here's one that did work. There's a hanging man and we did go lower. I always just take candles regardless of where they're at face value. This tells us buyers stepped up in the lower wick. Just like, you could have an inverted hammer here. And why didn't we go lower, right? Inverted hammer on the low, why didn't that lead to lower? So it's the same thing, just like an inverted hammer on the highs. I would still think, okay, you break its low, you're probably lower. Point being, not a hanging man. Buyer stepped up off the lows. Weekly trend remains up. Let's just quickly take a look at the volume profile on the weekly chart here. Take a look at this. You closed over the highest volume node of this upper bound, which naturally is going to happen when you move into blue sky territories. There's no weekly bars to overlap, but that's just going to give us a little bit of buffer there to hold above it and continue in the upward direction. So without further ado, let's just drop it straight to the daily chart and see what's going on from this perspective. Let's begin, as we always do, with the weekly expected move, gray shaded area right here. I thought this was actually very interesting. The close was at 295.59. The expected move, if we go on over to the IWM out 7 days, there you go, $7.41 you'll have it. So what does that give you when you do the math? It's perfect to the number 303. Anyhow, here it is, expected move for the week, and 303 is naturally a new all-time high in the trend count, and this is an equal low to last week's low in there at 288.18. I've been just using the 288 whole figure. The number, if you want to bump it up just slightly, is 288.50 in there. Daily 20 SMA. As we've said on the Russell for a little while now, there was no lower low on the daily trend count. We're not dealing with a daily lower high either. This is a little bit more of an orderly uptrend happening through here versus the S&P, which is kind of like, S&P pulled back, kind of did this, and is now in here, right, on an equivalent basis. So a little bit stronger on small caps. And honestly, if I have to read into that, what's that telling us about risk appetite? I mean, this stuff is speculative, right? It's very rate sensitive. And on the heels of an FOMC that a majority of people perceived as being more hawkish, which, I would align with that. I think Kevin Warsh is trying to build more credibility rather than, actually forecast that he is going to hike rates twice. We'll get into that on the fundamental section. But in a hawkish environment, you'd expect maybe small caps to be getting hurt here. And they're just not. You had a nice even 3-day pullback and then inside-ish day in the upper 50% of the range on Thursday. I mean, to me, this is just asking for consolidation here, up and out, and then you're looking for a new high. We've talked about this in the past, and maybe this has to happen again. Let's just zoom like this. Let's take a closer look. Oop, one more attempt. There we go. We've talked about this in the past. Bull flag, too perfect, needs to break before it can go higher. Bull flag, oh my God, it's so perfect, needs to break before it can go higher. Bull flag, it's so perfect, breaks before it can go higher. Is this going to go bull flag, wick everyone, and then go higher? It's a possibility. I'm just saying keep an open mind to the idea that the Russell is still in an orderly uptrend. And if we test this low again, even we could wick it and come back above for another daily hammer that, I don't know, maybe looks like that. I would still classify this as a higher low in the trend count, and that would be bullish for small caps still. That's what I wanted to land on the daily chart. Let's go to the hourly. You could see that we do have the mosquito pattern in full effect. It's your inverted head and shoulders with a singular proboscis acting as the head. There you have it. Your wings are in place. Very straightforward. Consolidation, continuation over 295.25. You lose the wing mark and you're doing this. You're wicking that 20 SMA. You need to go lower before you can go higher. There's your recovery effort. Where's the flag going to get waved on small caps? You do something that looks like this and then you do that. Okay, hang on a second. We're back down at the daily 50. You're overshooting this with lower high acceptance underneath 288.50. That is your problem spot on small caps, which I'd take note of that absolutely for our market and probably carry it forward as a slightly stronger headwind to the S&P 500. But right now in its base configuration as it currently stands for small caps over here, this to me is actually more of a tailwind to the S&P 500. Are we going to get broad-based participation with things like small caps really continuing to sustain a bid over this prior left side high at 292.50? That's the main argument. Let's go ahead and jump in here with our Fibonacci pull from the low up to the high. You could see that the FOMC came into the 38.2. We're staying above that. We could even pull this from the all-time high to the FOMC low. There we go, 38.2 here. If we're staying above that, that's the equivalent of, just inverse the start and stop point there. It'd be the 61.8. The more time we spend above that, the greater the odds that we do not trace 100%. If we do spend some time underneath that, the greater the odds that we do see the one, in this case, 0% retracement back down to the low, right? Pretty clear here that no man's land is consolidation. You clear out no man's land over this structure, just aligns with that 295.25. We could throw on the anchored VWAPs. The anchors will be slightly off because you've been stronger here on the IWM, but nonetheless, this is still the news candle. That doesn't change anything. We're sort of curling off of that as support, and we're over the all-time high anchored VWAP as of Thursdays. I was going to say Friday, as of Thursday's close. So consolidation here, bullish, curling off the anchored VWAPs, continuation. You lose it, you could pull back to where? Great confluence in here around that 288.50 early on in the week. Let's jump on over to the Russell side of the market profile, internals first, then profile. Strong volume inflows. AD line is fine. Cumulative build technically up on Thursday. No real problems here with our Russell. And if we jump into the market profile to finish up, let's go here. That's the arrow I'm looking for. This one. Let's just fit this on the screen. There we go. Excuse me. Same concepts as the NQ primarily, but this case is a little bit more nuanced. See here, and then your value's lower on Wednesday. Notice your value area is higher on Thursday. It's an inside bar still, but I think that the character change is notable coming off of the week close on Wednesday. Getting my days right here on shortened weeks. It's just funny, back to back. We've had shortened weeks now a few weeks in a row, or at least in a few months, back to back shortened weeks. All right. Let's continue along here with the analysis. Let's get down to the fun part where we can dive behind the scenes and start taking a look at the sector performance and sort of market context here as the market is doing this at the S&P 500 level. Who is leading, who is losing, and where was the weight? We've got semiconductors still leading the charge here, up 2.55% on the week, followed by industrials and then utilities. We have risk on and then we have risk off here, defensives with utilities. That is noteworthy. The bottom of the barrel is IGV. That is, of course, the software sector. You've got, it's not an 11 sector, but it's a subsector, industry group. You've got real estate towards the bottom of the barrel, as well as healthcare. Honestly, healthcare also defensive. I'd say real estate, neutral in terms of weighting. It's actually lightweight and defensive-ish if you want to think of it as hard assets as protection there. So, the posture doesn't really seem overly risk off. I would just say it's a little bit narrow with the concentration of movement in semiconductors. I mean, even the heaviest weight stuff, the XLK, which of course is a blend of semiconductors, software, and all other components there, that's up 56 basis points on the week. So how bearish is that really? It's not, right? Let's check in on the structural charts. How can you be bearish on the broad market in a AI-dominated tape when the SMH is out there making a brand new all-time high? Are we extended? Yeah, we're still a little bit extended, but are we just coming out up and over these highs after a pullback? Yeah, we're also doing that too. So I wouldn't be shocked to see some sort of attempt at continuation ahead of MU earnings. MU earnings will throw a wrench in the mix, and then we take it from there. As long as the market's going to be over this gap, keep in mind on Thursday, the unfilled gap tells us what? Stronger sellers just simply didn't do their job. The opening print is the low of the day. Open equals low candle. That's bullish here over this left side peak. So consolidation and continuation, great. The AI trade lives on. You pull back a little bit further, no problem. I mean, just stay, as they say, surfing the 20 SMA, no problem there either. So watching that on SMH, let's go on over to industrials, brand new all-time highs. I would say that, intraday, you really don't want to be trading this thing long. It's like every time it tried to go higher, it got smacked. But net on the week, it is technically higher. It's higher in an ugly manner, but that's bullish for markets, right? There's plenty of room, even if this does fail and come in a little bit further. This is a bullish configuration for a higher low after having broken out of this sideways range over here. I don't really think there's anything wrong with industrials. Let's keep going. Let's take a look at utilities. This is a defensive sector rejecting the daily 50. If it pulls back, am I heartbroken for the S&P? Absolutely not. It's lightweight, it's defensive. I don't want it leading the charge anyways. Yeah, downward pressure is not great, but like sideways to down isn't going to kill the S&P 500, especially if the baton's being passed. I shouldn't even say passed, if it just remains with semiconductors and some risk on. Let's jump on into technology. I think this is a more interesting watch than the SMH just because it's not blue sky territories, and it's a very well-defined little left side high here. If you can grab yourself a break up and over 192.25, do we have what it takes? Do we get dead cat bounces on Microsoft, Amazon, Google to really fuel this XLK? I know, Amazon's discretionary, Google's and comms. I get it. But generally for the tech sector as a whole, did the Mag 7 names bounce here and give us some kind of a break up and over this 192.25? If so, great, probably bullish for the market, right? If those Mag 7s start to participate again. Let's go to the IGV, which is software. As much as this move looks ugly and as much as this is kind of an H pattern lower high, I think this hammer's telling us something. Was this too far, too fast to the downside? Do we deserve a little bit of sideways through here? Even if it's not, massive up, I think sideways is fine. And we allow names like Microsoft, we allow names like Oracle, and we mainly allow names like Palantir to sort of regroup and sort of figure out, okay, are we done selling these things yet or not? Right? The structural trends are bad across Microsoft, Palantir, and you could say Oracle, right, on those givebacks. But we'll see if we can step something up at the daily 50. It would be great if we could stay over the top end of this previous base. So this 88.10 spot is a big deal for IGV. That'll be a top focus for me early on in the week if we need to trade some software. Real estate, pretty nasty give back on the hawkish Fed, but to where? Just the midpoint of the flag range. Failed breakouts, fine, maybe a little bit lower here. It's one of the lightest weight sectors for the market. I'm not overly concerned. Moving along to the XLV, healthcare, a little bit more concerning. Healthcare is sort of that safe haven spot to go hide out in when the technology trade's not going well. So this range trade breaking down here through the 20, parking itself on the 200. Don't love that. I would have preferred that these two hammers kind of kept things in range here and then up and out. What I will say is that the XBI, if we just go here, although I wouldn't attach this to healthcare outright, it's kind of its own thing, more risk on. This looks good, breaking out of this range in here, and I think that XBI could offer some trades, specifically some of the components. We will see them in the trade ideas section at the end of today's video. Let's go on over to energy. Energy, I don't think, as much as this pattern was bullish and whatnot, the headlines make this too difficult to trade. So if you are trading it, honestly, I probably think there's a bounce here in energy, some kind of, hey, over the weekend, it's like, is the straight open? Is the straight closed? We don't really have clarity on that. Oh, we're threatening this and that. I think maybe the market's a little optimistic about returning to quote unquote normal so quickly in energy, but too far, too fast to the downside, a little bit of a dead cat bounce here off of this previous left side low. Is there a long in energy there? Probably as a quick trade, but I wouldn't overstay your welcome in this sector. Let's go on over to the XLP. This is risk off, right? So as risk off sells like this, what does that tell me about the market's appetite for risk? Probably bullish, right? This is not leading the market back higher on the pullback and then subsequent snapback post FOMC. Look at the day on Thursday, right? It's lower in that range. So XLP is telling us that buyers still want to be involved in the heavyweight risk on stuff. Let's go to comms. I don't love this chart. This is just a classic bear flag breakdown. We had talked about the threat from the flush point here. We had talked about how this is still just a lower high, and nonetheless, we are lower. So I don't want to be a short in the hole down here, but it's very difficult to want to maintain any sort of a bullish stance on XLC as the chart looks like this. Now, if you want to get very nuanced here, you have a look below and fail of Wednesday's low on Thursday. We close back in range. If you could take out the high from Thursday, I wouldn't be shocked to see this higher, but to structurally say that the trend is changing back up, do we get some kind of inverted head and shoulders? That's probably going to take more than one session. And we'll check in midweek, of course, to see how that's developing. For now, dominant trend is down, but there is the possibility for a counter trend, noting the way we closed on Thursday. Let's go to the XLB. Looks like a failed breakout here. This is the lightest weight sector by market cap, so don't really care all that much, and there's still room here for a higher low to maintain the uptrend there. XLY, another one that's somewhat concerning like the XLC, but note here that you already do have a little bit of a higher low. Tesla, Amazon, are we going to play nice? Are we going to get something going on to keep us in the range, close the gap, try again for the move up and out through the highs at 120, 125? We shall see, but for now I'm pretty neutral over on that XLY. Mag 7, is this a double bottom off of the daily 200 SMA is the $1 million question. A little bit of a funky chart with this gap over here. We closed the gap, and then of course on Thursday, just like the XLC, a little bit of look below and fail on the low from that Wednesday bar, getting my days right here again, and close higher. So is it ready for it? I mean, I would be more confident on a daily trend change over the neckline at 67. Just like we say, a double top is not a double top until it is. A double bottom is not a double bottom until it is over the neckline here for something more constructive. I think there's probably a trade in here for a counter trend, but I would not jump the gun on being, full steam ahead bullish on mags there until we actually make a new higher high over this little rejection, really. That's what it is, of the daily 50 SMA after breaking, right? This is just kind of an H pattern until proven otherwise. Let's go on over to, so here we go, XLF, the final sector. Really impressed with the break last week. We talked about that on Wednesday. Little, I shouldn't say shocked, but magnitude of the move on Thursday, a little bit larger than I would have expected, especially with that open that was higher in the upper wick from Wednesday. Nonetheless, room for a higher low pullback here over the daily 200 SMA and the range from this area at 52.85. As long as that sustains, we said it on Wednesday, I'll say it again, your S&P 500 is not going to go to zero if your financial sector is acting well and offering a new trending spot for a higher low pivot over 52.85. So if this is a knife, like a hot knife through butter, and we close back underneath the moving averages all through here, then great. We'll take that in stride and we'll say, okay, red flag, big failed breakout. But at face value, something that does this, probably bullish, at least for bare minimum, rotation thesis in the S&P 500 rather than outright collapse, right? You don't have to go higher, but you're probably more so sideways if sectors are rotating. Let's jump into the ratio grid. If you're not familiar with the ratio grid, check out the video tutorial in the top right-hand corner. This looks great, curling off of some higher lows back up towards equal highs. A breakout is just risk on. This looks great, really impressed, and I think we just saw this with the structural chart anyways, but looks really good on the relative strength from XLF. Would like to see some improvements over here. I'd say neutral with the attempt to at least offer a higher low. No good on communications. Risk off isn't really a big deal, so I'll go check, check, and check down here. And generally speaking, we might be sort of treading on thin ice with the narrowness of the XLK, which is even narrower to the SMH, but maybe treading on thin ice with the narrowness of the market breadth here, but nothing that I can say or point to even and say and kind of indicate risk off as the dominating theme. If we look at the specialized ratios, this is the A set. This still looks okay. This still looks okay. New high over here is great. This is kind of a bit more neutral, apples to apples, XLY, XLP. Kathy, neutral. I mean, you're not trending lower. You're not trending anywhere really. You're just kind of sideways. And then this ideally curls for a higher low and get back to the daily 50. So if this does happen, if you take that out and you see a shift from value back into growth in the Russell 1000 products, then guess what? That's probably telling us that we should be a bit more risk on, right? Let's jump from there to the B set and see what we have over here. Gold contract, so no flight to safety there. That's bullish. This still just looks like a bull flag after a humongous rally to the top side, so that's bullish. bullish. Bitcoin is not getting the job done. This looks like a lower high to me. I would expect lower in Bitcoin here. So some kind of an equal low reattempt that breaks through after a lower high is higher probability. That's been the problem for the market. I shouldn't say the problem. It's been a problem in the sort of crypto space, but the market's obviously rallied without that. It's primarily driven by AI and the semiconductor trade. Nobody really is looking at Bitcoin right now as, oh my God, it's breaking the bull case for markets, right? If we look at copper, I would really like to see a higher low step up here and actually make it to the equal high. If copper is going to remain respectful and kind of just hang tight up towards these highs. If this does start breaking down more aggressively under these lows at like 620, I would put that in the back pocket as a small divergence to add to the bear side of the ledger. Let's jump on over the dollar. Dollar continued higher here. Is this going to be a failed breakout is the $1 million question. And my interpretation is kind of yes, honestly. Why would I say that? Because as we know, crude oil easing, right? Rates should technically be easing. I know Kevin Warsh put on the big boy pants and said like, hey, we're going to be more hawkish. Inflation's a choice. Let's focus on this 2% goal. I know he said that. I think the market priced that in here, but is he actually going to act on that is the big question. You take a look at the Fed Fund futures, and the inverted ZT is a good proxy for now, really hasn't made a substantial new high versus what we had prior. So the market's like, all right, we hear you, but I don't know if we believe you. Right, that's kind of, in my interpretation, what's happening here. So speaking of, let's not sort of beat around the bush. Let's go to the Fed Watch tool. You could see that the market is pricing in as we look over here. Let's break out the black crayon, please. There we go. We've got one rate hike coming as soon as September is what the market's pricing in. A second rate hike coming as soon as January of 2027. But in my estimation, this is probably, or what I would expect, I guess. I would expect pause here. I would expect rate hike here. And I would expect continued pause and then potentially shifting back to cuts into the back half of 2027. I think Kevin Warsh is going to, I don't want to say play games, but, he's talking about these 5 task force. We joke all the time now about, oh, we're going to establish a trade brigade task force now. He's establishing these 5 task force to evaluate, communications, and, all these different things. But one of them is for new data, right? They want to be using new data. So are they just going to sort of skew the way that they're looking at inflation and say, oh, we look at trueflation now, and trueflation's gauge is less than 2%, and therefore we're at target and we don't really need to hike rates. I would doubt they actually use trueflation. They're going to come up with their own thing and that, whatever they prefer, but that's the idea, right? So I don't buy the idea that this is correct. If I'm wrong, then, I'll have to be wrong, and we'll, of course, experience that with the market. But that's sort of my thought as it comes to the Fed tracker tool here. Speaking of, this is what the market forecasted, or this is what the Fed forecasted in their SEP. You can see the 3.8, right? That, of course, is 2 rate hikes into the end of the year. I think, again, that is just like, that's wrong. I think that is not going to be what happens. You can see here, revising the median rate projection for 27. And the thing that everybody's been making a big stink about is that 9 participants, right? That's 3. This is 5. Okay, there you go. So 4 and 5, 9. There's your 9 participants saying, hey, we want hikes into the end of 2026. And here's the majority of people really kind of anchored around unchanged. So I think you've got some division inside the Fed there. I don't think that you really have a huge bias for like massive hikes. I would think as crude oil shocks maybe settle down a little bit, some of these people start dribbling lower and the market prices in pause as the sustained thing rather than hike. So anyways, that is that. You could see that, yes, participants, broadly speaking, if I just scroll down here, we want the PCE. Broadly speaking, think that risks are weighted to the upside. Just to cover this one last time, talked about it on Wednesday. The Fed came, the Fed went. I think we're just sort of like, let's forget about it until the next catalyst, right? We'll hear from CPI numbers. We'll get labor numbers. We'll get the next major economic data, and we'll see how the market responds with the backdrop of this new Fed. Until then, I don't think it's worth getting overly hung up on that. But if you care to know my opinions on the Fed and what they've announced, those are them. Let's jump on over here to the economic calendar for next week. Speaking of flash manufacturing and services PMI from S&P Global, don't really care about that all that much. Flash is usually more important than final revisions, but it's the ISM that matters more there. Core PCE, which is probably no longer going to be the Fed's favorite or preferred gauge of inflation. we'll see if the market just like shakes this number off entirely. You've got your answer. Jobless claims, the usual stuff over here. Williams, Goolsbee, some Fed speak into the end of the week, and that's it. Consumer sentiment and inflation expectations, these are revisions. Market usually does not move as much on the revisions. So that's your economic calendar for the week. Let's talk about the big kahuna. It's Micron. Micron earnings on Wednesday after the close have the ability to make or break this market. As we know, this is primarily because memory names have been leading the charge, right? So what do we want to watch for on Micron? It's probably about DRAM pricing, right? Do we have forecasts to continue to be sold out of DRAM? And what are they doing with NAND, right? So is NAND really going to come around and become a substantial part of the revenue growth, right? So we'll watch out for that. Just reading through some notes I wrote on another screen here. Gross margins. Last quarter, Micron guided that gross margin to be around 81%. That's huge. So we'll watch for margins above 82. Oh my God, like off to the moon we go. Below 80, probably risk there. CapEx we'll watch for. CapEx plan is above $25 billion and said for 2027 spending would rise further with construction-related expenses climbing by more than $10 billion. So CapEx is customer-backed. If it's customer-backed, that's bullish interpretation. If there's no demand for that CapEx, no reason to be building it out. Obviously, that's your bearish interpretation. So we'll watch for that stuff. But Micron earnings is going to be the big make or break here. So that's it. That's what we got. Another thing to maybe watch out for is the big argument that memory is cyclical, right? Cyclical, this is just coming to mind now. Cycle, let's just say cycle. Jeez, spelling it, writing, talking at the same time. If memory is cyclical, their orders should dry up. Their orders should start going away, and you're going to see a huge suppression of demand. If that doesn't happen, then what say you? Cyclicality argument doer. So we'll watch, like, all of this is just going to be what to watch for on Wednesday after the close for Micron earnings. There is no FactSet earnings report to look at this week. It was pretty quiet last week. There's really no change to any of that stuff. I don't care much for any of the other names that are reporting in here, maybe Sunbelt alongside, see if there's any sympathy move over on URI, United Rentals. All right, that is it through these. Let's go back on over to the platform and take a look through our supporting evidence, starting with our bond relationships. Forecasting that inflation prospects should be moving in the downward direction, labor market stabilizing over here. Let's jump into credit spreads, continuing to look good on this front. That's risk on as that curls lower. Let's get into, come on, menus. There we go. HYG, no divergence. We've got no divergence happening over here. This low, the only thing you might say is like that's a slightly lower low versus this being an equal low. I wouldn't read into it too much. HYG has been wildly inaccurate up until this higher low pivot here as we had lower lows. These are out of sync now, but if I do that, there you go. See the cursor, see the crosshairs, low, equal low, S&P, low, lower low, right? Equal low, lower low. You get the point. That's the only divergence that's played out properly this time around. So pretty much use HYG as a bullish divergence finder, not a bearish one, because you would have been led astray massively if you were using it back over here. Let's jump on into our breadth, and we'll just maximize each pane to go through it. Breadth compression here, right? Breadth compression here. We know that memories are narrow, MU. By the way, if you don't know the package, it's MU, SanDisk, WDC, and STX Seagate, right? So let's keep going from this over to our RSP. Inside day, a little bit of a weaker close versus the weighted index. I've been using this 205.50 breakout point. It's nothing special. It's not a special level, but as long as we're above that, my interpretation is bullish generally for breadth. You can see here on the QE, this is the equal weight NASDAQ side. Much better of a bar versus the RSP, but generally speaking, I would just watch this. It's much more aligned with the QQQ weighted anyhow. That is it through our breadth, which means we can move along into volatility. Volatility has remained suppressed down here, which I find very interesting. We've woken up off of the complacency effect floor, and honestly, we kind of feel more like that late July, early August situation where the market continued to grind through the summer rather than the October analog where volatility exploded, remained kind of elevated and had a second wind there in November. So that seems fine to me, a little bit more healthy for the market here as volatility remains suppressed. Same thing over here. Notice that on the retracement after on the July-August situation, we didn't even get this low. So this is telling us that, yeah, market participants are pretty comfortable here. Nobody's reaching for insurance, which you could say is like too complacent still. The Bollinger Band width hasn't really gotten to that point on the VIX. Let's go on over to the vol futures. I still have to update this. These expired on Wednesday. So for now, ignore the white line up at the top. Let me see if I can't do a little bit of this for a second. There we go. Focus on this brightest gray line right here. Still in contango across the board. Contango here, and the one-day VIX kind of in comfort zone near the midpoint of the range. It would ideally continue to get lower in there. I think this is fine after an FOMC to just have a little bit of lingering volatility into an OPEX as well. Big triple witching. Futures expired as well. Fine. I think you could easily see this slightly lower into the early stages next week. The only thing that might derail that is just any commentary over the weekend or uncertainties about this MOU, the signing, and the Strait of Hormuz. So that is volatility. Let's jump on into the core list of companies. And quick note on the core list of companies, I'm going to continue covering them as really crucial and critical points, can't speak apparently, for the S&P and the NASDAQ. They are the heaviest weight companies in both of those index products. However, we have observed over the last month that they are not really offering great tradable opportunities per se. It's not like every day you can just go over to NVIDIA like you used to be able to in the past and say, hey, there's a great daily chart set up here. Let me buy this. Let me sell this. Let me short here. Let me buy this. Let me long that, right? It's just not the way that this has been working. So we're going to continue the coverage on the heaviest weight, most important companies for the index itself. But the tradable opportunities are really in MU, AMD, Intel, SanDisk, Marvell, what else? Taiwan Semiconductor comes to mind over here. AMAT, Applied Materials, right? KLAC, which just split, is going to be a little bit more approachable now. It's no longer $2,000, right? So those names are probably where more of the actionable ideas will come from, but it's worth keeping the pulse on where your Mag 7s and your heavyweights are. You probably don't want to lose sight of them, right? And just like forget about them entirely. And there will be trades to to take here, but they're probably just going to be lower frequency, right? So just a quick note on the Mag 7s. As it relates to this inverted head and shoulders, I like it over 211. Can we reclaim the daily 20? So I know I just sort of said like poo-poo, NVIDIA, you're not important anymore. You're not actionable anymore. I think this is actionable early on in the coming weeks worth of trade. Over 211, over 212, 75, 20 SMA reclaim. Do we get back going up towards this 225.25, this little rejection point, 220.75? I'll be watching for that. If it's just flagging out down here, I've got to call it for what it is, bear flag, and I would expect lower. I don't really want to be short into this neighborhood. Why? Look left. Don't really want to be short into these prior highs. Don't really want to be short into this left side low. If we crack all of that with a lower high underneath, something like 197, this prior low, that's fine. But do I really want to be short at 200? Not really. Let's jump forward to Apple. A little bit of a grind, but it is doing the thing off of the previous all-time high. I still think you could call this bear flag here. Underneath the 20, it's been really lackluster. I would say just patience here. Either up and over 300 on a reclaim or nothing to do. Bear flag gets more intense underneath the daily 50 and a loss of 288.65. Let's move on over to Microsoft. Really, really tough look over here, failing the breakout after that massive move. Like we talked about on the XLK, XLC, XLY, a little bit of look below and fail happening on the Friday session. You did catch a tiny little red to green move there. It's possible you get a little bit of a counter trend bounce here. Do I love Microsoft for longs? Not really. I'll be waiting for a weekly reversal out of this Microsoft at this point before I really start thinking to myself, aha, I'm going to start buying this thing in the long-term account, really piling back into it. No, not really doing it until we have a weekly trend reversal. Amazon, what do we have going on over here? I'd love to view this through the lens of double bottom inside day on Thursday. So can we get up and out through the neckline? Can we reclaim the moving average stack and do this? I'm still a believer that Amazon is a better winner of the AI race, especially with all the headache Microsoft has had recently with OpenAI. And their Microsoft, models versus the OpenAI models, the frontier stuff. I just think Amazon's better positioned, the more well-rounded to win across the board in my estimation. So we'll see. Double bottom over the neckline, 247 is the number I'm watching. Can we clear that and get going in here? That would be the watch. If we just continue to flag out again, like Apple, perhaps we've got to call it for what it is. If you can't maintain the daily 200, you start breaking that. Yikes, thin structure towards the gap. Let's go over to Google. I think Google is one of the stronger Mag 7 names right now because it has not seen as much relative weakness through this. It's actually had relative strength. So does this hammer give us something to get involved in over its high like this early next week? Perhaps. I'm sort of between watching the hammer high if we go to the hourly chart. I'm between watching the hammer high for rotation to the range top versus waiting patiently, call this like micro inverted head and shoulders. Then here kind of opens you up a little bit further. That would be 373.50. Watching that on Google. All right, so let's keep moving over to Broadcom. Kind of a weird bar on Thursday, honestly. Reclaim the low. Got to give a little bit of credit where credit is due. This is a great spot in my estimation to be watching for shorts. Sellers did not step up at all. It was a really compressed range. There was no short setup there, if I'm being honest, but the lack of gap close underneath, the sort of curl into the close, I don't know where we go from here. I'm not pounding the table for getting long Broadcom, but if you're going to hold 405, if you're going to hold these prior range lows, maybe we just watch it there and say, okay, is there a reason to get involved on a moving average reclaim? Is there a reason to get involved if we stack daily higher lows and get into this earnings gap, right? Is that something to do on AVGO? Maybe. It's going over to the metaverse. I think this, like Microsoft, like Amazon, look below and fail of Wednesday's low on Thursday. Over 580 could be interesting towards this area, and then we'll reevaluate. If this is going to be double bottom, obviously you need to clear that neckline at 600. Do I like that? I really don't like getting long there. Why? Well, look left. You have all of this to chew through. Anybody who's trapped overhead supply probably is a seller in that location. So I don't love Meta. And once again, as much as the Mag 7 companies are important for the cap weighted index, I mean, like, what are we doing here? This is like terrible trading. This is an interesting when you take it down. Let's zoom, please. There we go. You take it down to the hourly chart. I think this is a trade. That's definitely a trade. Thin structure retracement, even if it's just back up to the neckline, scene of the crime 591. That's a trade early that next week. Look below and fail. Red to green move. Hammer high break 580. Is a trade on Meta. It's going over to Tesla, another one that's just like, what are we doing here? Point to the daily chart setup in this neighborhood. I think other than shorting the daily 200 reattest right over here, it's like not much to say about this chart. Big look below and fail on the Thursday session. Do I want to long this into that area? No. Like, show me something new through here, then maybe we'll talk. JP Morgan for financials, just like the XLF, really heavy day on that Thursday close. I think you could pull back as long as you're over 315.50, kind of looking okay for the XLF, and we'll see what earnings season does for us in a short little while. Let's jump on over to MU. This is where the rubber hits the road. The bottom three of the core list are probably the more fun ones these days. What else is going on here with MU Micron ahead of earnings? Options will be untouchable on MU headed into this week. Let's just go over here real quick. I mean, I don't know about you. You're paying $69, $70 for a at the money call ahead of earnings. IV crush, no thanks, not for me. So trading shares on MU, or you could go over to your MUU, which is levered Micron. Not that this is much better at 1080 itself, but going back to the underlying, this looks bullish. This looks like a break. This looks like a hold over the 3-day balance range high. Do you get a pre-earnings run up on a Brigade Bolt over 1150? Would hate to see it gap up. It's a little tough to chase that on a gap up. So would prefer you open in range, Brigade Bolt up and out over 1150. That is the trade idea like that. If you fail back into range, I wouldn't even want to be short Micron through there. I think if you're trying to short stuff, you short the stuff that went parabolic like WDC underneath this low. And these are not additional trade ideas, so trust me, there's still 5 more at the end of this. WDC, STX, these two are probably the ones that you short. I wouldn't really go, looking for a big short on MU. And SanDisk, honestly, I wouldn't really be looking for a big short on. I think this is just going to continue to grind higher ahead of MU earnings alongside MU. So that's that. AMD, let's keep moving through the core list. I think this is poised for sideways and then a big break at some point through the highs. We want to see that break happening on volume with momentum, not a lackluster intraday tape. Nice grind higher up and through 558.50s. For now, kind of balanced in all the right spots, though. If you take a look at the hourly chart, if this is a double bottom hanging out over the neckline on the Thursday session, next steps kind of look something like that. If you pull back, very clear, you have to continue holding on to your 507, which will be confluence with the daily 20 SMA. Last but not least, my favorite, the darling of the market right now. And, it's not just my favorite. A lot of people want this thing long. Hopefully you already have it long, but high tight flag on a weekly. Let's rock. Again, this is not Intel 140. This is Intel 200, right? Take me higher. Can you take me higher? Come on, Creed. Looks good. New all-time high close on Thursday. Little unfilled gap here. Tested lower. Unfilled gap. Closed higher. Just let's rock and roll. I mean, there's going to be day tradable opportunities into blue sky territories. Hopefully there is room for the swing trade to keep working. Again, go study high tight flags. Buy the book, how to make money in stocks. Study the high tight flags from Bill O'Neill. Study them online. Study them from any sort of database that you've got. Again, this is not Intel 140. This is like, let's rock, and I'll see you in the stratosphere. Don't want to be overly bullish. And again, we have to respect the setup for what it is. High tight flags are oftentimes explosive when they do work, but their probability of success is not always as high. They are harder to trade. So with that, I'll leave you on Intel from the core list of companies. I'm bullish the name. I would like to see higher. I like the volume coming in on Thursday. We'll see if we can't keep up higher lows and not jinx it. Hopefully it's not the TB curse instead of the Kramer curse. I know it did get the Kramer curse on Friday, but it's like this is just a textbook setup. It is worth having at least an attempt on for Intel. With that, let's get into these ideas. CoreWeave was an idea from the video on Wednesday. It's an idea from the video today as well. On Wednesday, it was a short underneath the inverted hammer low. Oops, why are we typing E up here? No thanks, CRWV. There we go. On Wednesday, it was a short. Obviously, that was, it didn't really trigger, if I'm being honest. There was no intraday setup underneath the prior day's low. So nothing to really do there, and it actually closed back inside of range after failing to go lower. The data center theme is hot enough, and I think CoreWeave, I've been kind of a hater for a little while because it's, go look at why are we trading CoreWeave when we could be trading NBIS, right? Which is just hanging out here, just complete beauty of a name. Just sayonara, nice to know you into blue sky territories. Disclaimer, also have a position in NBIS. No position in CoreWeave, but, is this thing starting to try to find its footing on a weekly lows, weekly higher lows? Is this a range? Are we going to try to break through the highs? Is it going to play nice? I don't know. Like it's something to pay attention to. I thought it was telling that it didn't go lower on Thursday underneath the previous inverted hammer low after 4 aggressive days up. Didn't need a bigger breather than that. Okay. Interesting. You got my attention. We'll watch to see what happens over Thursday's high. Next up, Robinhood, probably one of my top watches outside of the core list and specifically semiconductor names into next week. Look at the hammer after this big explosive break happening over the low. The overnight session low was overshot by just a touch at 104.30s. Wish I kept that on the screens even after that break. It was a nice reversal. Nonetheless, I think it's going to set us up for earlier this week. You're holding over the 200 SMA overnight low from that Thursday pre-market session. Big volume on the explosive break higher the day before. I think we're here, looking for higher out of Robinhood, probably watching prior day's high, watching right through this pivot here at 108.75. You guys know me, round numbers only. That is the deal. 108.75, let's rock. Let's move from Robinhood over to IONQ. Quantum, ew, this guy hates Quantum. What the heck's going on here? Did hell freeze over it? No. Just a first test of the daily 50 after a pretty explosive move from what? The low down here is 28 to a high of over 72. So how could you ignore it? It's a strong mover. It's got some nice linearity to it. Obviously, it moves the best when it's got those catalysts and hey, the government's going to invest a bunch of money in quantum, right? That's what moves it the best. But is this a little look below and fail of the left side low? First test of the daily 50, break hammer high, head back up here. Certainly a possibility. It's something I'll be watching for. Look below and fail on the Wednesday low also after a controlled 3-day pullback instead of a 3-day Armageddon. If it was a 3-day Armageddon like this, different story. You're not trading that thing long down here, but with a hammer, a little bit of stopping power there on Thursday. I think it's in the cards as at least something to have on the screens. mRNA is another idea from the Wednesday video. We talked about on Wednesday this, cup and handle, and lo and behold, it started to break out. You're probably not chasing this thing long as soon as the market opens up on Monday, at least I'm not, but I would like to see if this thing can tighten up over 57.65. Can we get some kind of a higher low attempt here and go up and out? That would be bullish as a single stock selection for the XBI that we were looking at over here. Same concept, but with single stock selection. Last but not least on the 5 additional ideas list is TSM. Talked about TSM briefly when we were talking about the more exciting names to trade and where the action is. Not as linear of a move through all of this. It's like you had a really hard time finding a footing through that. But 450 pullbacks for a day trade, something in there gets my attention. Do we have a left side peak support for at least a trade back up to the all-time high? It's something that I would be interested in. The options on this are usually a little funky. Sometimes they're good, sometimes they're not so good. We'll see where this ultimately lands. By good, I should also be referencing our volume and open interest, right? You could get away with 1,600 contracts if you're going to trade, 10, 20, 25, maybe 30 of them here. But generally, you probably don't want to represent more than 10% of the options volume. So, it'll definitely start to play a little bit of a role here depending on where that volume moves into the coming weeks worth of trade. So we'll see on TSM. It's been a little tricky ever since they released these 3-day expirations on Monday, Wednesday, Friday for the Mag 7s. All the options liquidity has gone over there. I could rant about this all day long. I hate it, but it is what it is. We trade the markets that we have and we adapt to whatever's going on. That's what I've got for you in today's episode of the Weekly Watch List. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. It is Friday when this video comes out, so hopefully you are able to enjoy your long weekend. Remember, markets are closed. They were closed today. So let's see what we get over the long weekend news news-wise, and we'll reconvene on Monday morning, right? We will, of course, be live back up here in the office at 8 a.m. Eastern time for another episode and installation of the pre-market prep. Hope to see you there. We'll build an updated game plan for the day ahead with the latest data in hand. Again, enjoy the long weekend. Stay green out there this week. And as always, I will see you in the next one.